How you doing, friends? It is Tuesday, May 24th. It's 3 o'clock, and this is the final hour. The final hour, the very last final waning minutes of the 0 DTE day today of the options on the SPX. Or the E-mini futures, if you'd like, or the XSP, which is 1/10 of the SPX. And if you're a weenie, you can trade the SPY. Anyways, we're here to see if we can put on a trade on the very final waning minutes of the options contract, where the premium is decaying at an ever exponential rate. Does that make sense? An ever exponential? It's kind of redundant. Anyways, the premium is decaying very quickly. The market itself is in a turmoil. The market is approaching a level that everybody in this universe, our universe, has their eyes on. And that is, I would say that level is right at about 38.15 on the E-mini or the SPX, right around there. Because below that level, we will have dropped 20% from the all-time highs. Now, what does that mean? 20%, that's the official marker for being in a bear market. 20%. Now, we hit that mark on Friday, very briefly. And if you look at the thumbnail of this video, you'll see I have this picture of a pot of boiling water. And that's exactly what the market felt and got out of there very quickly. Now, we started to move down like that earlier today, and we got to a point where they felt like that was an inflection point. It was either go, no go, going for that 20%er, and then they got out of there, and they've tried to keep this market elevated. There was Fed minutes released at 2 o'clock. That seemed to have a slight positive effect on the market. But if you look at all of the economic reports, everything is just pointing to dire straits. Energy is still up. Gas prices are still going up. Supply chains are faltering. They're getting worse. Energy costs are skyrocketing, particularly with diesel. And trying to transport stuff when your costs are 2, 3, 4, 5 times what they were before is putting incredible pressure on everything. And believe me, people are feeling it big time. On top of that, we have inflation running rampant. Right now, inflation is as high or higher than it's ever been in modern times. In fact, I think it's actually much worse, because the way we calculate inflation these days is designed to make it appear as if inflation isn't as bad as it really is, and that's really kind of a political thing. But inflation, if you were to calculate it the way they did back in the late 70s, early 80s, when it was really high back then, you would find that inflation today is much higher than it was back then. And we thought we were in a load of crap back then. It is much worse right now. So here we are with a failing market, skyrocket inflation. We are heading towards that dual combination, what they call that stagflation. Stagflation is about the worst type of economic condition that you would want to be in. That's where interest rates are rising and markets are failing. People are losing their jobs. That will be the next thing. As people find, or companies find it harder to produce and make a profit, they're going to have to lay people off. But that's where we're at. Yet, the market is hanging in there. They are doing everything in their power to elevate, to keep us from that magic line, that 20% line. And it's been quite a battle today. Let's see. Let's put that up on screen. We can take a look. Now, these arrows were my pre-market analysis of where I thought the market was going to go, and you can see it, fairly accurate. I have not yet seen this final arrow coming down to this green line where that's the 20% line. You can see here on the left here on Friday, we got down there briefly, very briefly, and then just, blasted off from there. It was like putting a firecracker under your ass. And we just took off from there. But here's a very, very telling thing. Last night, when the session ended, look what happened here. The session ended, and we had a huge gap down. So this was Friday. Then on Monday, we went kind of sideways, nowhere. And in fact, we had no trade on Monday because of that. After the market closed at 5 p.m., this is the futures, and then reopened at 6, it had dropped nearly 30 points. This is extremely unusual. This hardly ever happens, at least this much of a gap between the close and the open in a midweek session. Now, you can sometimes see that on the weekend, and that's understandable because the market closes on Friday and doesn't reopen until Sunday. So you have 2 days where anything could happen and anything could upset the market, and you could understand a gap like that. But mid-session, midweek, this is crazy. You never see this. That is a huge gap, and we've been unable to retake that level. And we've been slowly degrading, and at one point the bottom fell out, and then we've recovered since then. And we're doing everything that we can. All of these drops are being followed by these kind of bear market rallies. Now our goal here is at the end, in the next 54 minutes, to figure out, well, where is price going? Now, this is a really tough assignment. Where is the market going? Where are the people online? Tell me, what do you think? Where is this market going? From here, are we going up or are we going down? Thumbs up, thumbs down. Let's hear it. I'm very surprised that we keep on pushing up like this. It seems unnatural. You got to wonder who are or what are the forces that are holding or propping up this market. It just doesn't seem possible, particularly when you look at the economic reports. So we have somebody, all right, so mostly down in the peanut gallery. We have 2 people inside of our Discord group that are saying up. Unreal. Nobody knows. All right, here's a nuance. Down overall, but maybe a small spike up per power hour. I like that, playing both sides of the fence. So we now have about 52 minutes. We have to figure out where this thing is going. If it's going down, let's say that we move down, and how far can it move? Right now, what is the expected move from where we're at right now? We have about 19 points of expected move given the current volatility. If we take a look at the options chain, you can see on the call side over here, we have the 39.50 strike, which seems to have mustered a little bit of strength, and a few other, a fairly good distribution of volume on the call side. But it seems to be, I would say, equal on the put side. In fact, here we have nearly 30,000, equaling the 29.50 here at 3,900. And then if you go a little further out to 38.50, we have nearly 40,000 contracts traded there. So I would say overall, the puts probably have it. But it's still, near the money, it could go either way. That's the way I look at it. In fact, the call side has a little bit more near the money, but as you move further out, let's see what it looks like further up for the call side. See, on the call side, when you go further up, there's nothing. Nothing. So they're all playing it close to the vest. When you look at the put side, much more volume going way, way out, all the way up down to 3,800. So the market is playing for a down into the close. So this is a trade that I have on right now, but it's not doing well. So I have it centered at about 38.75, and we keep on moving away from it. It was doing really well. We were right up here for a while, and then we get this little push up. But anything can happen in the last 50 minutes of the market. So we'll try to figure this out. We'll come up with a trade that seems to have the highest likelihood. Right now, I would say, based on the options chain, there seems to be a little bit more strength. 5, 10, 15, 20 strikes out. 5, 10, 15, 20 on the call side. So it's a little bit on the call side, but going further out, if we can advance or drop just maybe 20 points or so, then it's definitely going to start leaning towards the put side. So I think that's exactly what's happening now too. The market is trying to keep things elevated here because that's where their best chance is to keep it from falling into the abyss. And that's the story right there. This rectangle represents my trade right now. Is that right? It's probably not correct. Let's see. Let's get that up. It's probably up right about here. Let's see. 75. Yeah, my trade's more like this. So this would be where my trade is situated. So I think that this has a good opportunity if the market starts degrading a little bit here, but it has been grinding up ever since we made this sharp move down earlier in the morning. I just don't know what is holding it up. What is holding it up? Eric says he's got the PDT rule violation last Friday, so sitting on his hands. But we have a way of avoiding the pattern day trader rule here. If you have an account that's lower than or under $25,000 and you want to trade the SPX, and the way you do it is you put on an opposite trade. So if you're putting on a put butterfly and you want to lock in your profits without getting tagged on a PDT trade and closing that trade, you put on the exact opposite call butterfly, and then that will hedge it and zero out your P&L, essentially locking in the profit right there. Then you can let both of them expire, and that will save you a PDT strike. Let's see. Richard said, "Who carries more weight, open interest or volume?" Now, open interest are the open contracts that happen at the beginning of the day. So that's not updated in the options chain throughout the day. That's what you start off with, and then throughout the day, the volume is showing you what's being carried forward. So the question is, what carries more weight right now, open interest or volume? Volume certainly does. Earlier in the day, you start with the open interest and then see where things are going to go, and then you watch the volume as it accumulates over the day. Too Much says, so would this be market manipulation to attempt to artificially prop up the market? Okay, let's be real here. The market is always manipulated by whoever can manipulate it or whoever finds the power to manipulate it. Everyone is trying to manipulate the market. To think of market manipulation as some sort of, extra affair or some special power that's out there that is forcing the market one way or the other, it's whatever institution can do it. Now, there are some people that say that there's this thing known as the plunge protection team, and a lot of people think that might be the Fed, that when the market drops dramatically, that they might be there to help prop it up. That goes, who knows? Maybe that's true, maybe it isn't. They have circuit breakers in their toolkit. If the market drops too fast, they can shut down the market. but they can only shut it down for so long. Then they have to reopen it, and it could continue, and then they can shut it down again. But in terms of manipulation, it's very difficult to manipulate the S&P. I mean, the S&P is perhaps, the biggest market out there, or one of the biggest markets, and there is no one entity that could actually affect the market in any material way. It would have to be kind of a coordinated effort. And I wouldn't read into what I just said there. It's not like there is some sort of collusion or conspiracy where a number of these institutions are all coordinating and trying to push the market one way or the other. Or are they? I don't know. So it looks like we're finding some resistance at the top of the value node. T0 is one of our primary value nodes, and that lives. Let me just show you how all of this is marked up. T0 is one of the primary value nodes that has been responsible for a lot of the price action, providing gravitas and sort of hanging around that node. These green lines are what we call low value nodes, or LVNs, or the bottom of volume wells, where there's a depletion of volume. And they also have a kind of grit or structure to the market so that when price comes near them, it'll either provide support or resistance, or at least some sort of transient behavior. And you can see that very clearly. Now, all of these lines were drawn, a couple of weeks ago, prior to price even being here, and so you can see that that the market is respecting them for whatever reason. And most of these lines, these features, were developed more than a year ago. So that tells you something. If these lines, if these profiles in the market were developed more than a year ago and they're still respected to this day, then that means one of two things. Either the market simply has something in for those particular price levels, or institutions are still holding positions from that time ago, and they're defending them or playing off them or whatever. So it's one or the other, and it really doesn't matter which one it is, because it's a reality. When you look at prices from a year ago, and the profile is providing these sort of structural elements that are affecting price today, it's a real thing. It's not fake. It's not imaginary. You can see that it is actually real. Like this LVN right here, you can see it clearly has been providing resistance from underneath and support from on top. And on the gap down, it gapped right below it. Right? Same thing with the move down on Friday, where it came down to this point here at 38.15 and bounced right off of it. Same thing here. Now, when I draw these lines, they're not always perfect. You're kind of eyeballing it on a big ranging chart, and so you might be off by 2, 3, 4, 5 points. I don't know. But overall, they are providing excellent guidance. So if I were to zoom out, let's say go to a day chart, you can see how we've marked these things up. All right. And so you can see right here, see, this is the 20% decline line right there. And then this LVN is marking that little volume well in between these two nodes. And then this big node here is the T0 node. And what I do is I create this kind of channel around it, placing the top and bottoms at the steepest incline of the node. That's where the price drops off the fastest. All right? And then same deal with all of these lines. They are chosen for their particular feature in the profile. And then price automatically will follow those lines. So all of this stuff was drawn a long time ago, and as price came down, it gave us guidance on how to trade these markets. That's the power of volume profile. Now, a lot of practitioners of volume profile believe that the proper way to treat it is to look at session volume. I am not a believer in that at all. I don't think session volume, it has very little to do. How can you go by session volume when you can see that these lines that were created more than a year ago are having such influence? To say that session volume has influence, it simply doesn't. I'm sure that that's not necessarily a true statement. I mean, there is some level of current volume and market ups and downs and places where it consolidates and trends and so forth that does have influence. However, the longer term structures also have a great deal of influence and sometimes exert even more influence than the near term. In general, I found that the bigger the node and the newer the node, the more gravitas it has. However, there are some really big old nodes that have tremendous gravitas and way more than some of the newer nodes that may not have the same, I guess, size or girth or strength to them. So, and it's the same way with the LVNs, which are the absence of volume. For whatever reason, those areas where there is a complete absence of volume, those have significant structural effect on price movement. And so we have developed a kind of lexicon or a language and a behavioral language on looking at how price will behave as it traverses across this structure that we mark up. And then from that, we use that as our way of modeling the market, modeling its structure, bringing into account the trajectory of price, its price vector, its direction and magnitude that is usually a result of some outside economic or geopolitical or macro condition, economic reports, the Fed, whatever it is that's moving price in one particular direction. And as it crosses that structure, we apply this language that we have, and we can then create scenarios that will very accurately and often, I would say in a high frequency, be able to predict where price will go. What are the possible scenarios? And we don't always just pick one scenario. Well, sometimes we'll pick one or sometimes two, maybe three at most at the beginning of the day. And from that, we're able to model our trades. And so that's how we do it. Yeah, that's correct. Adam says that session volume is just the fractal of the bigger picture. And that's absolutely true. Everything is fractal in nature in the markets. You see these patterns in the small, in the near, in the now, and then you see them as you move out. The same pattern just applied to a bigger space. So, but, I'm sitting here trying to get a feel for this market. Are we going to go down or not? So it keeps on trying to dip and then gets pushed back up. They do not want it to go down. I would say that, the fate is sealed, in my view. I think eventually we're going to go down and we're going to test that 20% line, the 20% downturn in the market, the 20% that marks the bear market territory. Eventually we're going to cross that. And then everything will change. Every institution, every news outlet, every analyst, they'll all flip and turn into a different person. It'll be like Jekyll and Hyde. But for now, it looks like they just do not want to go down there. They're not ready to accept reality. They're just not ready. They can't take the heat. So, but where does that leave us? Where does that leave us? What shall we do? I mean, where could we place a trade? See, I look at this this structure here, and it looks like we have if we do not break another high above the previous high here at 230, I think that we're going to go down. That's a guess. But if I had to guess, I would say that we're going to go down and we'll probably test the bottom of T0 here, this yellow line. That's what I think. I think that if we do not break this high here, we're going to roll over and move down. Now, then the question will be, will we break this low here? Because we've had higher lows and higher highs, two higher highs, two higher lows. Will this be the end of that? Will we turn over? This is the time. This is it right here. The next half hour, the next 35 minutes. You know, we could make a guess. We could say, okay, it's going to go higher. Or we could say it's going to go lower. I think that's a 50-50 shot. Man, this is tough. You know, I'd love to sit here and make another strong trade. We had the same problem yesterday where we just couldn't make a trade. And I feel that way right now. I feel like I can't make a trade. It's 50-50. Either we're going to break this high here and move up here. If we break this high, then what I would do is I would stage a trade at this LVN up here. Right? And then I would also stage a trade at the bottom of the T0 down here. And at some point, we may break up or we may break down. We're closer to breaking up, but it doesn't look like we have the strength to do that. As I speak, we may just surge. Who knows? So let's see. Mama Cash says that 3930 looks like resistance on the
New
ES.
visitor.
It does. Well, 30.
Returning visitor.
So 3930, which is right here, or right about there, somewhere in here. You know, what you can say is that, at least in the short term, that's the edge of this minor newly formed node. And this is where the market doesn't want to be, up here in this volume well, this minor volume well. But that's all new stuff. And whether or not that they can break that, I just don't know. But you know, I think that I think the market and institutions feel if they can just hold on here, they'll be okay, and they'll dwindle right inside this little child node here. And then things will be okay, and they can live for another day. I guess that's the way the best way to look at it. They can live another day. They're not yet ready to pack it in. So Shreems wants to know, is VIX a good indicator where the SPX will end? No, the VIX is nothing more than a reflection of what the SPX is doing. The VIX is, in fact, a calculated index that is based on calls and puts in the SPX. So whatever the SPX is doing, that's what the VIX then will sort of indicate. It's showing its range, its volatility. What's the call, Lance says. That's what I'd like to know. What is the call? I don't know. We are stuck here. Either we're going to break this recent high and go up to the LVN at 3950, or we're going to break down and perhaps get below this most recent low and then go down to the bottom of T0. I mean, that's my call, but the thing is, I just don't have any good indication which is going to happen. I wish I did. You know, the same thing happened yesterday. We were stuck in this kind of channel here, just going back and forth and really not showing any kind of direction or any way to break out. Here, we have gapped down to a new level, right? So we've gapped down from this previous level that was between these two green lines, these two LVNs. We gapped down to this new level where we're somewhere, I don't know, between the top of T0 and this LVN up here bound at 39.50. But we're not going anywhere there. We tried to dip down. We got rejected. And now back up to here. So I want to make a call. We are currently in our final hour trades. This is episode 23. We have done, let's see, is this episode 23? So we're 16 and 20 with our calls. 16 and 20. There was no trade on Monday. And there may not be any trade today. So we're 16 out of 20, standing at about 80%. Our last trade was a huge winner, approximately 350, 400% return on our risk. But it's been kind of disappointing these past couple of days. Dexter's saying we can just go horizontal and finish the day where we are now, kind of do nothing day. That's where we're at right now. I mean, but you don't want to commit any money to that, right? I mean, what good is that? If we committed money to, say, a butterfly right now here at the money, we're going to be taking on a lot of risk for a relatively small amount of profit. What we want is to put a butterfly that is out of the money, that has a great risk to reward ratio. So like right now, as I said, you could probably put on 2, but here, you're going to take a big chance. It could be this 39.50 level. You could put a fly up there. What might that look like at 39.50? 39.50. So 39.50. Even a 5 wide would cost you 25 cents. That's pretty expensive. So we could go 10 wide. And that's going to cost $1. Let's see what that looks like. So there's one possibility. And that's pretty good risk to reward. That's about a 1 to 10 risk to reward. I don't mind that trade. It's not a bad trade. For 90 cents. But I don't know. Is the market going to go up or is it going to go down? Let's just play along. Let's say we're going to flip a coin. We'll say that we're going to take the bullish trade. I'm not going to take this trade. I'm just going to put it on here and then just hold on and then see what happens. And then the other bearish trade that I would take, if I were going to take a trade, right, would be probably down here, right at the bottom of T0. So let's say at 3,900. So at 3,900, well, we can do that right here. We'll make this 3,900. And we'll make it, we'll also make it 10 wide. Let's make it 15 wide. What the hell? Let's live. And then that would look like that. And of course, that would be a much bigger trade. So let's turn this guy off here. It would be a much bigger trade, but it would require us to move a little bit further. So this would have this one would cost $2. Oh, that's because I have two contracts. This would cost $2 and have about, let's see, it's 15 wide, so 1500 would be $1,300 potential profit. So here, you know, $2 into that, it's about a 1-to-7 almost. Risk to reward. There are our two trades. I mean, the bullish one looks like it's got a better chance because we're closer. The bearish one has more potential, but it's further. So it looks like price is moving up. Yep, it is. That was the correct choice. Look at that. That was the correct choice. 39.50. But I didn't take the trade. Look at that. Didn't take the trade, so it's another non-trade today. But those would have been my two choices.
Returning visitor.
All right, so Jamal wants to know, does it make sense to put on both bull and bear trades? As a, you know, you would think so because, hey, you know, we can win one way or the other. But what you're really doing when you do that is you're cutting your risk to reward in half. And if you did that all the time, you know, your expectancy of profit in the long run would be diminished dramatically, even though the risk is relatively small. And so, yeah, we don't do that. Actually, we've done that a few times. We call that the Batman trade, only because it looks like two Batman ears. But right at the last second, it just decided to break free. And there you go. But see, that's why I didn't take the trade. I mean, there's some people commenting in the group saying price is going up, but the volume suggests downward move. And another person says, who knows? It looks even to me. So I couldn't see a difference. And it until it made that breakout, by then it was kind of too late. I suppose if you were fleet of foot, you could have put on that bullish trade, as I was calling it. But yeah, didn't work out that way. That's okay. That is okay. You got to wonder, though, you know, what is pushing the market up to there? What possible economic force or reason could the market be pushed up a good 20, 30 points like that? For what reason? Everything in the world is telling us, really, Mama, you said you did? Well, then you can send me a tip. It's you know, what good reason could the market be going up here, other than fear, you know, the fear of what will happen if we move down. You know, every single economic report is saying that we're in the crap can. Look at it; it's going to keep on going up. Will we test? Here's the big test right here. Will we test and break through where we gapped down to last night? Will it break through there? It's trying. It's trying. No. No, somebody's getting paid off there. Somebody is getting paid off there. So another member said they flipped a coin and took the bullish trade in at $1.05. Yeah. I would say at this point, I would take your profit, quite frankly. I would take that profit if you had it. Mama Cash says out at $3. Not bad. Yeah, I wasn't as brave as the other people. I just decided not just to stand aside. Again, second day in a row. That's okay. I didn't lose anything. See, it's going to start coming down now hard, I think. Yeah. It didn't want to close that gap. It did not want to do that. It tried. So we still have 19 minutes left in this market. Anything could happen. We could come all the way down. That could happen. We could come all the way down, or we could close the gap. Who knows? There's still a lot of time left. And this market is running scared. All right, so let's see if we can make this interesting. From here, I don't think we're going to end here at 39.50. It's possible. I mean, if you look at the options chain, 39.50 has a fair amount of volume on it. 39.50 is at 37,000 contracts. That's not a huge amount. There are other, at 3,900 we have 35,000. So, and at 38.50 we have 38,000 contracts. Where are we going to go from here? Are we going up or are we going down? Thumbs up, thumbs down. All right, Jamal says up. Mama says flat. Jeremill says up. Carl James says up. Void Realms says down. 17 minutes. Jamal says 39.79 now. That means that we're going to fill the gap. Wow, that would be a hell of a move. 39.70. Okay. 39.70. Yeah, that would be quite a move if we went to 39.70. 39.70, that would just about fill the gap. That would be incredible. My vote is down. I think that in the last 5 minutes we're going to drop and end up at about 39.25. 39.25 is my guess. The stock options profit says down. I like the emojis. Those are cool. K-Dog says down to 39.10. Jamal, 39.70. Void Realms, down. Carl James, up. Jeremil Davila, up. Mama Cash, flat. And my call is for 39.25. So I better type that in, right? I say 39.25. See how that works out. It's going to get another resurgence. Now, see, there's logic I can agree with. Up makes no sense, so therefore I say up, says Jeff. And Philip says closes the gap. Yeah, because that would just defy logic, right? Why should we go down when all the economic reports say that the economy's in the crapper? That means we are living in opposite world again. When we had the accommodative policy, everything was opposite of whatever happened. So if we had a good day, the market would go down. If you had a bad day in economic report, the market would go up. All right, so Philip's saying 39.69. Yes, within 14 minutes, anything can happen. I've seen the market move 60, 70 points in the last 5 minutes. But I still think it's going to give this up. I think that this was some kind of payoff for somebody. They pushed it up, and someone got paid, and now it's up there. They're trying to unwind and then they're going to come back down to the T0, the launching pad. Jeff says he made 100% on the morning trade, so he skipped this one. Media says blah, so banks can buy the dip. Yeah. They're all trying to manipulate the market. So still, I can't believe 13 minutes to go. It's like, is this market over? All right, there might be still a trade here. We have made trades with less time to go. We have made trades with under 10 minutes. So I would say that if we break through the 39.50 level and put in a new high, then I would put on a trade at 39.80. That's what I would do. I know it seems crazy. Maybe even put it on at 39.75. No, 39.80. That's if we break a new high. So price would have to go above 39.54.50. That's my alternative scenario, So my first scenario is still to go down to 39.25. That's where I think all of this is just hype, and it's like a little mini balloon waiting to burst, and then at some point they're all, the market makers are going to say, I got to go home. It's 39.22 Tuesday. Yes, we need twos. I like that. Now, see, I think if we break this little low here, if we get below this level right here, where we made an intermediate high, and it's the low of this volume well, I think that we're definitely going to be going down to here. Inside the T0. Inside the T0, there is safety and comfort. So Jamie says is in the 39.50, 15 wide. Well, good luck, Jamie. That's pretty good. What did it cost you? So right now you're doing okay. So here's what the 39.50 trade looks like right now. If you got in when I had said, you would be up about $150. When I had called it, that would have been your cost. There you are, about 150. Not quite centered, but look, it looks like it's going to give it up. It's starting to fly. It's starting to go. See, we just went from $150, $175 profit down to about $60 profit. Oh, you're in at 275. So that's pretty expensive. So at 275, it looks more like this. So you're out of the money right now. You really need it. Your break even is at 39.47. You have to be above 39.47. So that doesn't look good. Are we breaking down? Are we breaking down yet? We got 9 minutes to go. Remember, I said 39.25. Here comes the bear trap and the bounce. Yep. And now it's going up. Let's zoom in on this a little bit more. We'll get the minute by minute. Get a good look at it here. So we need to break this low, get below this area right here. And then once we grab a hold of the edge of this node, it'll get sucked in right down to the 39.25. That's my guess. Eight minutes to go. Could I be right? Am I right on this one? Come on, 39.25. We want to see it. Let's go. 7 minutes to go. Gary hopes that I'm right. Thanks, Gary. It will mean nothing because I have zero money on it. It'll just be pride. In at 70 cents. For what? You got to tell us what you're in at. What's the trade? Are you going for the 39.25 too? Pride is better than money? You can't spend pride, Adam. So this must be some sort of philosophical thing, right? Pride is better than money. I would say honor is better than money. All right, so you have the 39.25. Yeah, I know. I get it. You missed the 3 there. So it's 10 wide, 39.25. It's coming, We got 5 minutes to go. Yeah, stock option profit has $1 million on closing between 39.20. Yep, we believe you. Mama Cash says money is better than pride. What about honor? I make the assertion that honor is better. Oh, there we got a big spender here. 39.25, 10 wide for $1.50. See, just when you announced it, that's when it started moving away. We've got less than 5 minutes to go. How much is honor? You can't spend honor. See, Mama Cash came to her senses. Honor is better than money. Come on. You can do it. So we got less than 4 minutes to go. Both honor and pride. I don't know. Pride. I think pride is a little close to lustful. You know, it's honor. Yeah, I don't know. Honor isn't something that you bestow upon yourself. It's either you have it or you don't. Pride is something that I guess you feel in relation to others. I don't know. Honor sounds more. Okay, now it's turning around. No. Look at that. What's going on there? There's less than 3 minutes to go. All right, Jim. Up on over 275 for the day. That's excellent. Yes, honor and integrity. Those go together well. Thank you, Walter. See? We have somebody on here that knows what they're talking about. Less than 2 minutes. It doesn't look like I'm going to be right. Nobody picked 39.38. Probably coming up on 1 minute to go. And it looks like this is where we're going to end up, I think. Jim had 39.40. All right, then you win the prize. You're winning the prize. Yeah, I can go back and I can check. Let's see. Did Jim have 39.40? I'm going back. Yes, you did. You had 39.40. All right. But now it's slipping away. 1 minute. There's a lot of money coming in. You can see the volume profile growing. Those are orders. Yeah, it looks like 39.40 is going to be it. Amazing. Oh, no, look at that. Look at last few seconds. Wow. Pretty good. Pretty good call. Jim Seraphin wins. I don't know what you win. You win honor and pride and integrity. Oh, well, there we go. Another non-call. It was just too difficult to call. I guess I could have flipped the coin and gone with the bullish trade, but I really didn't know. It's tough. It's tough at this time when you're on the precipice of falling into the abyss, trying to figure out what the market wants to do. I think what the market wants to do, maybe we learned from this, that the market right now is trying its darnest to keep out of that lower level, going below the 20% correction. Because once you go below the 20% correction, you are now in a bear market. Everything changes. I believe that we're going to be there this week. But in the meantime, we're going to have more of this type of behavior where the market is trying its darnest to stay above that level however it can, because it's going to have wide implications. But if we keep on getting these kind of economic reports, we're going to have an energy report tomorrow at 10:30, where we have the EIA Petroleum Reserve Petroleum Status Report and others. It will report on where things are, how things stand in energy. I heard that California now many of the stations there are retrofitting their pumps to add an additional digit so that they can get up to $10 and above per gallon. How's that? Just imagine that. $10 a gallon? That would be crazy. But that's what they're doing. They're actually doing that. They expect to go to double digits per gallon. And that's going to extol a huge tax on the average person. I don't go anywhere. I'm a hermit. The wife and I, we work out of the home, and everything that we need is right here. She drives to the grocery store. That's about it. So I really feel bad for those people that have to commute every day. It's really going to be tough, taking a big chunk out of their pay. And that's going to be felt hard. And everything that we buy, everything that we purchase, everything that we use needs transportation. And so that cost is going to get passed on to all of that. So anyways, that's it. That's the Zero DTE. We'll be doing this again tomorrow. We're going to be doing this final hour trade for as long as we can go on. What I really want to accomplish with this is that if we are in a bear market, if we start really dropping, I would like to see how this strategy holds up during that bear market. We'll learn a lot. I'm fairly confident about how it will hold up, but I want to learn about what are the things that may happen that will affect the trade. And with that, it'll make our overall strategy stronger. So that's what we're going for. And like I said, I'll be doing this for the next 30 days or so. If you'd like to join us in the Zero DTE service, go to zero-dte.com/try, get a 4-week trial, and join us along with 600 other traders. And I guarantee you that you're going to learn a lot, and you're going to learn how to actually make money with very little risk. So there you go. I hope everybody has a great rest of the day. Peace to you all. Take care. See ya.